Hi, welcome to the Interaxis YouTube channel, Interaxis.io. Today we're going to talk about a report that came out from our friends at Delphi Digital called The State of Bitcoin, May 2020. First of all, our friends at Delphi Digital, without a doubt, the top research for institutional investors, for all sorts of investors in the digital asset world, cryptocurrency, blockchain, decentralized finance. They do unbelievable research. We highly recommend reading this report, which we'll link to, and we highly recommend, if you're at all interested in digital assets, cryptocurrency, or anything, reading their research. Another thing we'll tell you is that neither their report nor this video is any sort of endorsement to go buy Bitcoin, sell Bitcoin, buy cryptocurrency or anything. We're just talking about the state of Bitcoin. So what happened was recently Delphi came out with this article, or this report, The State of Bitcoin. And it's a really important time because a couple weeks ago was the halving, or I guess last week was the halving of Bitcoin, which means the block reward for every block, the amount of reward that's given to the miners for every block that's processed got cut in half from 12.5 to 6.25 Bitcoin per block. Now that's kind of a big deal. It's only the third time that it's happened. So we were really curious to see what would happen at the time of the halving. So that was important last week for Bitcoin. And it still remains to be seen. It's something that we need to see what happens over a few weeks, even a few months, based on the halving, because it's going to have an impact on what miners are doing and such. On top of that, we have unprecedented economic times that is wreaking havoc on the world economy, and we want to see where Bitcoin fits in at a time when all sorts of infrastructure for Bitcoin has been building up. So here's what we're doing. In this State of Bitcoin report, there are a few points that Delphi hits to get to this state of Bitcoin where we are. First, they talk, and I'll talk here, about the macro economy. What is happening in the world, and is there potentially more money available to go into Bitcoin, or is there money that's looking for a home? Then, if there is, we're going to talk about why Bitcoin. Why Bitcoin might be one of those assets where money might go, or why it might not be, maybe why it doesn't fit. But we're going to talk about that in the state of this report, and then we're going to go look at some of the metrics and some of the technology that's going on, because we can't talk about Bitcoin as solely an asset. It's a technology, right? It's part of decentralized finance. So we got to talk about some of the tech that's going on and some of the metrics, because there's so much measurable with Bitcoin and so many different ways we can look at it, because it's a relatively new asset. It hasn't gone through a downturn like this. So we need to see what we think is happening. Okay, so we'll start with the macro, the macro economy. So interesting times we're living in right now due to COVID and everything going on in the world with all the lockdowns. Of course, governments have come out in full force printing money, right? So in addition to lockdowns, which is making the world GDP just drastically go down, right? So we have lowering of GDP. We have 10 trillion new dollars being printed. That's not all US dollars. Some of that's other currencies, other countries. Central banks are issuing new money, printing new money, but overall it's been over $10 trillion. And our government, the US government, has said they are ready to print more. Congress is approving bills. We'll see if the president approves it, but there's potentially a lot more money to go into the world economy, which is really important to note. One, because that money hasn't all found a home yet. We don't even know where all that money is going just yet, because people haven't been able to get out and spend. So some people are getting money and they're just sitting at home. Some people are getting money and maybe they're spending it online, maybe they're saving it, maybe they're looking for a place. On top of that, everyone's money invested in equity got hit pretty hard, right, in March, when the S&P 500 dropped 30% or so within a week, and now has come back, but it remains to be seen. Are those stocks, are those equities overvalued? Are they overvalued based on the extra $10 trillion? We don't know. But there's 10 trillion more dollars in the world now than there was just a couple months ago. Okay, so that's an interesting point to look at, is where is that money going to go? Is it going to get invested? Is it going to get spent? What's going to happen? And that is worldwide dollars. So that's some of what's going on in the macroeconomy. So what does that mean? Are there more dollars? Well, what happens is the U.S. The U.S. can print some of this money, right? Because the dollar is the strongest currency in the world. It's probably the strongest asset in the world to own, right? It's what we obviously refer to as fiat currency. So the U.S. dollar is incredibly strong, so the U.S. can print it. Also, the U.S. can print it because everyone in the world is going through this at the same time. We don't have to worry that our currency will get devalued in relation to the euro or the yen or something like that, because they're not going through it. Everyone's going through this at the same time. So what has happened is other countries, so the U.S., of course, in printing all this money, has lowered interest rates to zero. So we have virtually zero interest rate. That means if I want to hold dollar-backed assets, dollar-denominated assets, in terms of safe money, we call it safe haven. Where can I put my money that it's not in equity? It's not necessarily in bonds, right? Because bonds are earning no interest rate right now. Fixed income is not earning anything. Equities are equities. If I want to take a risk, I can do that. But we're talking about, where does safe money go? Safe haven money, money that I want to hold on to and make sure that it's still there. Well, I can put it in dollar-backed assets at 0%. The bad part about that is I'm earning 0%. The good part about that is it's the U.S. dollar. I'm not really worried about it devaluing too much. It is so strong that it's having a hard time losing any of its value. It keeps increasing in value, right? But then you have countries like, not to pick on these, but Brazil, Colombia maybe, Indonesia. Okay, they need to print some money. They need to help their people, right? They have lockdowns going on too, but they can't lower their interest rates to zero. And the reason is because these countries, their economy isn't quite as stable. The government's not quite as stable. So in order to get people to continue to invest in their currency and in their economy, they need to keep interest rates maybe at like 3%. So what happens is, if I'm an investor and I'm choosing where I'm going to put my money, my safe money, am I going to go to the U.S. at 0% right now or Brazil at 3%? Well, I'm probably going to choose the U.S. because I feel like it's a strong currency. Well, what's happened is in the last several months, the Brazilian real has dropped significantly in value compared to the U.S. dollar. So even if I'm holding reals, or even if I'm holding real-based assets, real-backed assets, I'm still losing essentially dollars because it's been devalued so much. So what might happen is people are going to start taking money out of fiat-backed assets from these countries, and they're looking for a place to put it. Okay, and if I have safe haven money that I thought was safe haven money in these currencies, I'm going to be looking probably for another safe haven to put it into. I don't go from this to equities, right? I don't go from this to necessarily risk assets like that. So I might be looking to put it in the dollar. If I put it in the dollar, I'm going to earn 0%, but I feel like it's relatively safe. Now, the other point to see is, of this 10 trillion, the U.S. is responsible for maybe 5 trillion of it, and they've said they might print more. What that means is, in the near future, that could lead to inflation. Inflation being that, I pay $1 for bread today, and in a year it's $1.05, right? So my same dollar that I'm holding on to in my pocket or in my bank account can't buy me as much because there are so many dollars out there. So if I'm just holding dollars, right, they don't have as much purchasing power in the future. So maybe do I want something that isn't quite as inflationary, right? That they can't just print money. So in the macro world, what we're seeing is there's a lot more money out there. There could be money leaving potentially other safe havens like fiat currencies around the world, and they're looking for a place. They can go to dollars, but dollars might be inflationary, and they're paying no interest right now. Okay, so what are the other options? And is this maybe where Bitcoin comes in? So now, if I'm looking for a safe haven asset, but I don't want that either to be inflationary or deflationary, right? And I want it to pay some interest. Now I have to go to what's called a non-sovereign safe haven. This is non-sovereign. That means it's not a fiat currency. It's not backed by a country. There's no there's no Fed. There's no federal bank that can issue more of that currency. There's no Federal Reserve central bank that can issue more of that currency. A non-sovereign safe haven. Well, the longest standing non-sovereign safe haven is gold. right? It's been around a really long time. People know gold. It's traded everywhere. As a matter of fact, gold ETFs have brought in more money. They're at all-time highs in terms of the amount of money flowing into gold ETFs. So what guys at Delphi are saying is maybe some of that money that would flow into gold might flow into Bitcoin now. Why? Because Bitcoin is potentially another non-sovereign safe haven. It's as non-sovereign as it gets, right? It is literally controlled by code. Now, what benefits does it have over gold? Well, it's more fungible, right? Fungible meaning it can be broken up. It's easy to transfer. It can be broken up into smaller parts. It can be validated, right? You can't fake Bitcoin. You always know how much is in my wallet. I can't send you Bitcoin unless I actually had Bitcoin. It can be broken up into smaller pieces and sent anywhere around the world in a matter of minutes. You can't do that with gold. Bitcoin's really easy to store. I can have some stored on a soft wallet on my phone or a hard wallet, right? So Bitcoin has these great characteristics to it that say maybe it takes some of that non-sovereign safe haven money out of gold. So you have 10 trillion potential dollars, you have dollars potentially moving out of other fiat currencies, maybe looking for another safe haven. Those can either be gold or Bitcoin. Now admittedly it's probably going to be more gold because gold, people know more about gold. They trust it a bit more. They trust it that it's not going to go to zero. They don't have to understand the technology to understand buying gold. They just might have to figure out how to buy it. Am I going to buy it in an ETF? Am I going to really buy gold? Am I going to buy futures? How are they going to do it? Whereas with Bitcoin, it's really easy. You just buy Bitcoin, right? You get a wallet, you buy Bitcoin, and then you got to worry about your security and risk and everything. So, but that's where we see that Bitcoin might take a little bit of that money. Now, that can be really significant because as we know from a supply standpoint, Bitcoin will only ever have 21 million. There will only ever be 21 million Bitcoin. So any small increase in the demand for Bitcoin is going to make the price shoot up, right? Because the supply for Bitcoin looks like that. There will never be more. Now, granted, we just had the halving, but that doesn't really matter. Everyone knows there will always be 21 million Bitcoin. So if your demand curve goes from here to here, it just makes sense that the price goes up. Okay, so that's why Bitcoin might be an option if you're looking for it as a non-sovereign safe haven asset. So the people that understand Bitcoin and really understand how it compares to gold or how it compares to fiat currency might go, okay, I'm going to take some of my money that I had in some sort of fiat currency or even in gold, and now I might put a little bit of it towards Bitcoin. So have we seen that? We absolutely have. We have had some unbelievable traders, some hedge fund billionaires. Last week was Paul Tudor Jones, which made huge headlines. Basically, he came out and said he likes Bitcoin as a safe haven. He's put 1% to 2% of his funds in there. 1% to 2% doesn't seem like a lot, but I mean, imagine if everyone put 1% to 2% in an asset that has a limited supply. That could be a really big deal. And the fact that someone that's that smart and that good at investing sees it and goes, you know what, this might be something. You have Raoul Pal, you have Dan Tapero, you have all these big hedge fund guys who are saying, you know what, we see the potential for Bitcoin and we're going to put some of our money in it. We know it has a limited supply. We know there's no Fed that can just go print more of it. We think the dollar might be inflationary, so we're going to store some of our money in Bitcoin. So that has helped. Again, so other people around the world might be going, okay, if those guys are going to do it, then we're going to do it. And there's this theory that says, I don't want to be the one who, I don't want to be the first one in. I don't want to be the one who's in there and it goes to zero and I look horrible. But if this guy did it, well, now I look kind of stupid if I don't do it, right? If he's successful, investing in Bitcoin, and I didn't do it, and I have a hedge fund, and I could have done it, and I don't, well, at least if it goes to zero, I can go, well, Paul Tudor Jones did it, so it doesn't look that stupid. It doesn't look that bad. I don't think it's stupid anyway. However, this was a big deal for those that are investing in Bitcoin last week. Now, after all that, so we've kind of gone through the macro, right? There's more money. We've kind of gone through the why Bitcoin, which also pertains to the macro aspect. So now we go back and we look at what are some other interesting parts of Bitcoin that might lead to more demand. Well, we have more infrastructure than we did years ago. Infrastructure. Sure. Okay. This is things like lending, right? Now you can use Bitcoin as collateral on a loan. So companies like Genesis, companies like Drawbridge, that are in BlockFi, that are, which is part of Gemini, right? Or uses Gemini as their back end. Sorry, not part of Gemini, uses Gemini as their backend. These companies are offering lending, so you can use Bitcoin as collateral to get a loan. Well, that's a big deal because that makes me comfortable holding Bitcoin, knowing full well that I can get other financial services on top of it. All right, so that is a really big deal, the infrastructure. Genesis did, I believe, $2 billion in lending, in Bitcoin-based lending recently. That's a really big deal. Then we have some funds out there, right? So we have Grayscale, which has their Bitcoin Trust, and we have Bitwise, which, by the way, we had a great report. Go look at our report on Bitwise. So Grayscale has I believe doubled what they had in their fund. Don't quote me on that exact number, but they've brought in an unbelievable now. I think they're up 100% year over year in terms of how much money has gone into their Bitcoin fund, and they're available for a lot of broker dealers. So financial advisors can get their clients now into Bitcoin or crypto funds directly through their broker dealer account. Okay, so that is huge. You have Square, right, which is started by Jack Dorsey of Twitter, has Cash App, and Cash App on your phone allows you to connect to your bank account and go buy Bitcoin. That has seen tremendous growth, which tells us people are probably buying Bitcoin, and either they're just holding it or they're sending it elsewhere, maybe using it for transactions. Okay, so these are some other infrastructure points. Now, I also want to get into the fact, which by the way, all leads to demand and all makes me feel more comfortable owning Bitcoin potentially. Now, the other part is if you look at our video that we released last week about the Bitwise report, which we'll link to here, you'll see the importance of something like rebalancing and the fact that it is a non-correlated asset, right? So if I'm looking at my investments, I want to find potentially a non-correlated asset. What that means is if my equities are going like this, right, I want my non-correlated assets to be going not exactly the opposite, but not do exactly what my equities are doing. And the reason is because I want to be able to rebalance. At the end of the quarter, if I'm going to have 55% equity and 40% fixed and 5% Bitcoin, for instance, in this case, and at the end of the quarter, this goes up to 60, and this goes down to 2.5, and this goes to 38.5. Well, I'm going to rebalance, right? I'm going to take 5 off the table here and put some here and some here. Now, if the next quarter this goes down and Bitcoin goes up, I keep coming out ahead because I'm always selling what went up because I'm selling a profit, and I'm buying what went down more. And from a rebalancing perspective, that really helps. So now we're seeing where people are using Bitcoin and they're not just saying I'm going to buy it and hold it till it goes to 50,000 or 100,000, but now I'm going to use it as part of a rebalancing of my portfolio. I'm going to use it as a non-correlated asset because I've seen where it doesn't always move in line with the equities markets or the bond markets or anything like that, and that is really powerful. People have really learned the value of rebalancing, and if you want to see it, watch the video we did on that. It's actually the most powerful paper report I've ever written on the value of rebalancing. Okay, so lastly, we're going to go look at some of the metrics and the tech that's going on to see what's actually going on, because the great thing about Bitcoin is it's so transparent. You can go look at the Bitcoin network and see what's happening on all these wallets, see the transactions that are happening. Of course, it's private, so you don't know who all the wallets are, but you can look and you can see what all is happening. So some of the metrics here are, we are seeing more and more wallets. So the wallets are of course, the software that holds the Bitcoin. We have more and more wallets that have held Bitcoin for a longer period of time. They've held it through some of this, which to us says potentially that those people see that we're just going to hold this for a while, right? So we have more wallets holding. Okay, we have more small wallets. What does that mean? Well, maybe there are more retail investors that are getting into Bitcoin, right? Well, that's bullish because there's so much retail money. As we said, $10 trillion flowing into the world economy. A lot of that is trickling all the way down, and some of those people are going to go, maybe we'll buy Bitcoin. Maybe those smaller wallets are also buying it because they're just transacting in it. Maybe they're just sending Bitcoin around the world. It's being used by a company called Bitso to send remittances back to Mexico. There are more remittances being done via Bitcoin and via cryptocurrency now. So that is picking up the demand. And of course, as we pick up the demand in Bitcoin with a limited supply, you start to see the values go up. Okay, so you have a lot more small wallets. You also have some metrics in there that shows that the last price, the average value that someone got in to Bitcoin, the last price that they got into is actually starting to creep up. What that means is those people have to start, those people kind of need the price to go up more to sell it. It also means that all those underneath them, all those that have bought it at lower prices, everybody's just holding on. Everyone's holding on because they feel comfortable with the fact that the value of Bitcoin will continue to go up. And although it crashed at one point down to from 20,000 all the way to 3, it's come back up nicely and held. So we have those kinds of metrics. But again, Bitcoin hasn't really been around a while and through a cycle like this, so we really know what's going on. So we have to just infer some things and hope that we see those. We have a lot more of these unspent transactions, which, as I said, means that people have been holding on to Bitcoin. They haven't moved it. More adoption from these smaller wallets. We have what's called the MVRV, the market value to real value, as I said, which is an interesting metric, which says that the real value is basically the price at which I bought Bitcoin. The market value is essentially the current value. As this number goes up, what it says that more people are in the money. More people have Bitcoin that's already profitable, right? So that's a good thing in that they're holding it for a while. It might not be so good in the really short term because it means that if the average is here and Bitcoin's here, I might go, okay, when Bitcoin gets here, I'm going to sell a little bit. I'm going to take some of my profit off the table. There are more people than there have been in a while that have some profit that they can take on Bitcoin now. What it also means in the longer term is that if they sell here, right, and Bitcoin comes here and you have a lot more buyers that come in here, well, these folks need the price to go here, right? So you have a higher floor means you have to have a higher ceiling for people to eventually profit. So there might be some profit taking. There might be in the future if it goes up like 15,000 again. But what you do is then you make the floor 13, 14, 15,000, and you have to push the ceiling up a little bit higher. So that's what we're seeing there. We also see, and again, we're not sure what this means, but people are moving more Bitcoin funds out of exchanges, and they're moving it into wallets like multi-sig wallets and such. And that tells us that people are probably looking to invest, to hold it for a while. Because if you keep it on the exchange, you're probably looking to trade it. And the traders make for that volatility. Whereas moving it onto exchanges moving it out of exchanges and into wallets like multi-sig wallets means that you've probably done your research and your homework and you're ready to hold it for a while. You're doing maybe some estate planning around it and stuff. So that's what we're seeing there. What we're also seeing is something called the Lightning Network. And the Lightning Network is basically like almost like peer-to-peer nodes of Bitcoin so that you don't have this 10 plus minute, 10, 20, 30 minute transaction time to clear a transaction. Is that on the Lightning Network, it's kind of like side chains. People can make little transactions here and there amongst each other, and then it can, all those transactions can almost be like one transaction on the Bitcoin blockchain. I way oversimplified that. Tech people, please don't get on me about that. But that's the essence of the Lightning Network. We've seen more nodes and more activity, which again means more demand. More people are actually using Bitcoin for transactions now. Is kind of what that tells us. And again, more demand, limited supply means value could potentially go up. So there's also some increased or some proposals on the table among the Bitcoin developers that say maybe there will be some more privacy. There'll be some more potentially some smart contract language that they're able to use on the Bitcoin network. So those potentially could lead to more usage, more demand, but we don't know. But what that means is, again, with the state of Bitcoin is not all about the value, but it's also about taking care of the technology, taking care of Bitcoin. And those folks that are looking at the code and taking care of that are really interested in potentially making for more privacy and potentially making for more smart contracts and ability to have lending and such based in potentially take on some of those decentralized finance type aspects potentially with Bitcoin. So that's really important. So overall, what this report says is we see a lot of reasons to potentially be bullish on Bitcoin. Again, with the macroeconomy, more money, it's got to find a place to go. People are potentially moving out of other fiat currencies or other low interest assets that they see as safe havens and moving into something that's non-sovereign, something where a government can't just increase the supply and therefore create inflation, devalue the currency, and all of a sudden they're left with less money than they thought. Or less buying power than they thought, and they can go to gold or Bitcoin. We see Bitcoin as being a strong candidate for that. It's not going to replace gold, but it's going to take some of that money with a limited supply. You see the value of Bitcoin potentially going up. Then you have these metrics here. You have people like Paul Tudor Jones, Raoul Pal, Dan Shapiro, basically saying we're putting some money into Bitcoin. We see the value here. You have the increased lending capabilities. You have funds. You have Square allowing people to really easily buy Bitcoin from their phone, straight from their bank account. You have companies like Bitso doing remittances. So you have all these really bullish aspects for Bitcoin at a time when there's money looking for a place to go potentially, and a time when people are not real happy with Federal Reserves, with central banks. So that, I believe in a nutshell, is this entire state of Bitcoin. Now they go into some other technology that really isn't that relevant here, and I probably can't explain it all that well because we're not really the tech people to explain that. And then there's some other reports. There's some experts that also weigh in at the end of the report. I highly recommend everyone go read this. If you're at all interested in this, I highly recommend that you subscribe to our friends at Delphi Digital. We, Interaxis, we're launching an academy this week where financial advisors can come learn about this so that you can help your clients, because if you're a fiduciary, even if you're not going to recommend Bitcoin, you might have clients that have it, you might have clients that have cryptocurrency, and you should at least know about it. So come join the academy. We'll give you more tips like this. We'll teach you a little more behind the scenes of what a wallet is and all that, what custody is. And we hope you enjoyed this video. We hope it made sense. We hope we did our friends at Delphi Digital justice with this. I know I tried to run through it really fast, but we wanted to explain a little bit and some of the key points that we took out of it. Go watch our previous video about the Bitwise report. That was really interesting in terms of volatility, rebalancing non-correlated assets, and how important that was. Subscribe to the YouTube channel, please. Visit us at our website, Interaxis.io, Twitter at Interaxis8, the number 8, and we hope to see you in the next video.